Hello everyone, welcome back to my channel. You are watching The Wealthy Brains, and now let's get in this video. Mr. Grosskopf assumed the role of Chief Executive Officer of Sprott Inc. in September 2010. Mr. Grosskopf has over 24 years of experience in the financial services industry and a background as an advisor and underwriter to companies in a wide variety of sectors. In addition to his role at Sprott, he also serves as Chief Executive Officer of Sprott Resource Lending Corp. And President of Sprott Consulting. Prior to joining Sprott, he was President of Cormark Securities Inc. Over the course of his career, he has established a track record of successfully building and growing businesses. Prior to joining Cormark, Mr. Grosskopf was also one of the co-founders of Newcrest Capital Inc., which was acquired by the TD Bank Financial Group in 2000. He holds a Bachelor of Arts degree and Masters of Business Administration from the University of Western Ontario. We talk about digitizing gold and the practicalities, plus what is his call on physical gold price? What no screamingly alarmist headline? No, Grosskopf does not need headline-grabbing statements to get noticed. He has carefully brought process and data to the way Sprott functions and is now at the helm of the last man standing in the natural resources space. So when it comes to gold price, we're listening to this guy and ignoring the sensationalists. Peter Grosskopf. And look, I'm a huge believer in gold. And if you take a look at the financial system and what's happening with the financial system now, you actually don't need to go too far. In fact, you need to be fully and willfully blind not to see that governments have credited debt which will never be repaid in a conventional way. There will be financial repression, sovereign bonds will become certificates of confiscation, and if you want to park cash, so to speak, you're not going to be parking it in fiat currencies or sovereign bonds and making money. You're going to be parking it in those instruments and losing money every year, guaranteed. So in that kind of an environment, there's a lot of adoption that needs to happen into gold. I mean, it's still a minority of investors that even consider it. It is growing. It's not a fringe asset anymore. And we keep talking about this. Our client base is expanding, laterally and going from sovereigns all the way to the smallest retail investors, but still households in general haven't converted. The average household has no money that's denominated in gold in their system. Institutions, I would say, are still only 20% adaptive to gold. And so there's this huge influx that needs to happen as gold retains its legitimate status as the preeminent store of value. And the question then is, how much volume can it handle and where does it go? And I think that process is very slow process because of course governments are still fighting it at every step of the way. And I think it's going to take until we see some inflation after this current crisis. It's going to take until we see some loss of control in budgets and fiscal deficits. And I just think based on everything I've seen over 2000 is now healthy recommendation by the end of the year, by early 2021. Personally, I'm going to take it one step at a time. I'm not going to go out and say it should be $3,000 based on the amount of debt that's outstanding compared to during the financial crisis, or what have you recognized that those are all valid. But so are those people who are worried about deflation. What are the few things that needs to happen? Either you get a correction in financial markets, which is becoming more and more possible, I think, given how extended they're getting. Secondly, you might get a major correction in rates. They're overshot now and are back down again. And thirdly, you might get disappointment in the economic side because the rollouts of economic growth given COVID-19 and given other difficulties are taking longer to conspire. That's what he told David Lin, anchor of Kitco News. Peter Grosskopf. Well, I'm an ardent believer that this is going to make a big difference to the sector and has been slow to take root, but the technologies are there and they're available. And what we're talking about is a digitization of the gold ledger. The gold ledger is a record every bar that's in storage, and it forms the vast majority of the net worth of gold businesses. If you think about the gold businesses, it's about $8 trillion. There's a certain percentage that's held by central banks, there's a certain percentage that is held in jewelry, and then there's a certain percentage that's available in above ground bullion storage. That number is in trillions. So we're talking about a huge market. I mean, talk about gold versus Bitcoin. Gold absolutely swamped Bitcoin. Bitcoin is like a flea on the back of an elephant comparative to gold. So, the digitization of that gold is above surface is absolutely required for gold to enter the modern age. And by modern age, what I mean is to lower the trading spreads to allow gold to be moved in a reliable, quick safe fashion between investment accounts for an individual and to allow gold to be spent in small increments as a payment system as well, which has never been able to do before. So when you look at those goals, those are all entirely possible now with technologies that are already working with on the table. So why isn't it taking off like Bitcoin? Well, it's because there are existing players in gold that are making too much money keeping the system the way it is. And we're talking about the LBMA and its members. We're talking about the big traders in gold. We're talking about even the World Gold Council and the GLD itself, which is a phenomenal money-making ETF. And most of all, we're talking about the spreads in the business to the retail customer, which are extremely punitive. Whether it's coins or whatever, or whether it's even buying small bars on storage. Who would invest in an asset that's supposed to be a liquid if you're being charged 5% or even 7% to go in and all out? I mean, it's never going to be taking hold. So what digital gold does is, whether it's on the blockchain, which I think by far is the most exciting and secure way of building the gold ledger digitally, or whether it's simply in electronic form, if you have a certificate of deposit that has now been verified and put into the electronic contract, those can both be sent in seconds. They can be traded in seconds. They can be traded with very low margins. Theoretically, it's all based on the claim that you have to the physical gold. And it would not work, in our view, unless an individual having such an electronic certificate could go to the point of origin where it's being held and claim their gold physically. That has to be the case. There is still plenty of long-term value in the gold market, with equities looking extremely attractive even as a precious metal trades below $1,700 an ounce, according to one fund manager. Although mining equities have dropped sharply since the start of the year, they are currently trading at a level that offers real value of investors, especially compared to the overheated general equity market. Peter Grosskopf, CEO of Sprott Inc., as we said on the sidelines of the Prospectors and Developers Association of Canada, the 2021 virtual conference. So this is what Grosskopf even added. The well-run procedures are a buy right now, he said. They represent gold, they represent good cash flow back equity investments against any other stocks. Supporting his outlook for the mining sector, Grosskopf said, sees the gold price driven by long-term fundamentals, even if short-term momentum is on the downside. He added that with bond yields rising and the US dollar on the move, he is not surprised that gold prices are struggling, falling below $1,700 on ounce. However, he also said that he sees the current price action as an oversold, healthy short-term correction. Instead of focusing on the short-term volatility, Grosskopf said that investors should focus on the long-term fundamentals, the conditions that drove gold prices to all-time highs above 2,000 an ounce haven't gone away. The threats of further future currency debasement and inflation have only risen as governments and central banks continue to pump liquidity into financial markets, he added. Although market sentiment, momentum, and real interest rates have all moved against the gold market, Grosskopf said that the U.S. growing money supply continues to be a significant support. The latest example of money printing came this past weekend. Grosskopf noted that on Saturday, the U.S. Senate passed a $1.9 trillion stimulus package. In the long run, monetary debasement is actually required to balance the system, he said. Governments around the world come up with new excuses to print more money. At the end of the day, that is the most important variable that will carry gold holders for the next 5 to 10 years. Although the Federal Reserve has downplayed inflation, Grosskopf said that the threat is real and only continues to grow. He added that the rally in commodities like copper, lumber, and oil would eventually lead to inflation. If you look at what is going on in the global economy, how does anyone say inflation is only going to be 2%, he said. With rising bond yields dominating the gold market, Grosskopf said investors are moving to other markets with better momentum in oil, real estate, and cryptocurrencies. Because the Federal Reserve is mostly brushing aside the bond market sell-off, Grosskopf said gold prices would continue to struggle as to how high yields can go before the Federal Reserve steps in. Grosskopf said it is impossible to know. The Fed will be driven by what they think they can get away with, he said. But once it does spiral out of control, the Fed will need to step in. But I don't know where that level is. This is all for today, folks. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. See you till the next video, and thank you for watching.